Okay, everybody, welcome back. Good to be here. We had a great first session. I hope you caught it, but if you didn't, it's in the archives. So please feel free to check out the archives if you can for a great first session that really dealt with dollar yen, with intervention, with this trade setup that really caught fire here last week. Hit all three targets, which, hey, that doesn't always happen, but we're always happy when it does happen. We're always glad to see that happen when it does. So all three targets hit on dollar yen. That's a good thing. Let's take a look around at a few other things that are happening. Stock market, there's the futures. First of all, stock market's really gone ballistic here, just going higher and higher. You see some red this morning, a little bit red today, but at the open, if you look at this, look at the way this is going. It's just unbelievable. This is the presidential election, this long wick right here. And this is where, why did we drop so much? I think people were actually listening to folks like Krugman and others who were saying that when Trump was elected, the stock market would never recover. And folks, I guess that's what you call fake news, right? Because I think you'd have to say the stock market recovered, right? But now we've gone into hyper mode, and this is kind of scary because you look at this sort of curvature here, right? This sort of, I don't know if I can bend this to my whims here, but when you angle, I can't arc it, but when you angle up like this, when you begin to arc higher like this, that's usually a sign that you're about to go into a crash mode. The shorts have capitulated here. I don't think the shorts are shorting anything at this point. Why would you? I mean, you're constantly getting run over. And a lot of this is fueled by lower taxes. You know, if corporations are paying lower taxes, then they're automatically more profitable, and that means that their stock share of the company is worth more, and that's being reflected in the stock market. But it can't go on forever, and you wonder how high it goes. I think, well, certainly the S&P will probably hit 3,000. But after that, I mean, at what point does the market say, okay, party, game over? You can't price it for eternity. But at this point, it appears the shorts have just given up. And why would you short? I mean, if every time you shorted stocks, you lost money, you'd give up too. You'd give up, or you'd run out of money from being on the wrong side of the trade all the time. One or the other. Right, so anyway, that's an amazing looking chart. So a little bit of red today, possibly due to Apple. Apple has been in this sideways pattern, but you see a lot of red lately. Here's the all-time high on Apple right here. And now we're down. What happened? Apple has cut in by 50%. Manufacturing for the iPhone X or iPhone 10 has been cut by 50%. No demand, very little demand for the iPhone X. Truth is, folks, the products are so good, you just don't need to constantly run out and buy a new one. And especially now that Apple has a huge problem, and I'll tell you exactly what it is. Their phones are really, really good, and you just don't need to run out and buy a new one every year. It's just, you just don't have to do it. Now, what they were doing is they were throttling the old ones. In other words, they were creating software upgrades that were making the old ones obsolete. People would notice that their batteries were running down really quick. But they got caught recently doing this. This is going to become their undoing, in my opinion. Maybe not their undoing. They can still be very successful. But this is really going to hurt them as far as their sales for iPhones. They were caught creating software upgrades that were slowing down, making their older phones obsolete. And now, as a mea culpa, I'm sorry type thing, they're replacing the batteries for only $29. Usually it's $79. It's only $29. So I have a 6S. I have a 6, and they're putting out right now. They're putting out the 8, and I have a 6, which is probably 2 years old. So they put them out every year. So they're up there. They recently put out the 8. I'm using a 6, and I've noticed recently my battery started wearing out really quick. Well, instead of buying a new phone, I just put a new battery in it, and it's just like new. Okay, it's acting just like new. So I'm not going to buy a new phone. I love my phone, right? I love my 6S. Why would I buy a new phone? No need, right? No need to buy a new phone. And this is what everyone's doing. I noticed there was a long line of people at the Apple store doing exactly what I was doing, getting new batteries for their iPhones and iPads. And that means none of those people are going to buy new. If they're all upgrading, if they're all putting new batteries in their old phones, what does that mean? That means they're keeping the old phones. Why would you put a new battery in a phone you're going to get rid of? You would not do that. You would not do it. Right? Therefore, this is not going to be a short-term problem. This is going to continue to affect them for some time. In my humble opinion, this problem is not going to go away. Alrighty? Isn't that something? Right? So Apple's, I think you see this sideways pattern? They were kind of getting ready. See how they were breaking out? And then all this stuff caught up to them and right back down into the soup here, into this sideways pattern. I think you're going to be stuck here for a while, folks, because frankly, there's no reason. You get a new battery in that phone, it's probably going to be good for another 2 years, right? So why upgrade? The answer is they're not going to do it. Okay, we need to buy houses, says Carlos. Well, yeah, I'd rather buy a house than an iPhone any day. Thank you very much. Right now, housing prices have been going up quite a bit, and a little bit, but and interest rates are going up too. Now people think, and now we'll check this out. XHB. Here are your home builders. Look at the home builders. Holy cow! Is that an uptrend or what? Look at this thing of beauty here, right? Man, I wish I was long the home builders. Look at this chart. So you're looking at this and you're saying, this is great, right? The economy's picking up and people are buying houses, and the millennials who have stayed out of housing and up until now they've been, oh, I don't want to buy a house. Now all of a sudden they want to buy a house. So you've got this whole group of people who've been staying out of the market suddenly coming back in. And the housing crash that was 10 years ago, a lot of people shied away from wanting to own a house because of the housing crash 10 years ago, left a bad taste. It's been 10 years now, and I think people are starting to forget that. And so you've got a lot of people now who are coming back into housing. And so I think it looks like housing is really gaining momentum here, right? And so look at that. That's a thing of beauty right there. And so housing is starting to move quite a bit. Interest rates are moving up. Here's TLT. When TLT is, these are bond prices. When bond prices are moving down, interest rates are moving up. You can see it going down, down, down. Perhaps a better instrument to view this is at TY. Yeah, there you go. Here's the 10-year Treasury. Now, most mortgages are based off of your 10-year Treasury, right? 10-year Treasury is moving down. Interest rates are moving up. It's going to get harder to buy a house. Now, having dabbled in real estate a little bit myself, I'll tell you this. You would assume that people would buy houses when interest rates are low. But they don't. They buy them when interest rates are rising because they freak out, because they realize they're missing this train. What's going on here? This is not interest rates. This is the price of the bond. Okay? And let me explain the relationship here. When the price of the bond is falling, the interest rate is rising. So the 10-year Treasury now yields around, this is the price of the 10-year Treasury is falling. So the yield of the 10-year Treasury is rising, and the mortgage rate is based on the 10-year Treasury. The mortgage rate is based on this. So the interest rate is going in the opposite direction of the chart you're looking at. And that means the mortgage rates are going in the opposite direction of the chart that you're looking at. Mortgage rates are going up. That means people are going to panic. They're going, oh my God, the rates are going up. We have to buy now. That's how the psychology works. But you're not going to see it in the winter. You're going to see it in the spring. You're going to see it in the spring because that's when people buy. They buy especially because if they have kids, they want their kids to finish out the school year in their current home, and then school ends, well, in the U.S. anyway. School's going to end in late May, early June, school ends. So that's when they're going to buy. So that the house settles. Takes a month or two for the deal to settle. The house settles the transaction settles during the summer. They get to move in, and then the kid can start the next school year in their new school with their new friends. And they don't have to change schools in the middle of the year. That's generally the way it works. So you've got a perfect storm coming up. It's February starting next week, right? And interest rates are low, but they're ticking higher. And you've got an improving economy. I think you're going to see the housing market explode in the U.S. this year. And this chart, right? This chart is telling you all you need to know, right? They're buying the home builders like there's no tomorrow, right? There's actually, not enough inventory for sale in some places. So there you go. It's a huge opportunity. It's going to be a seller's market. So if you own real estate, this is a good thing. The more you own, the better a thing it's going to be. Okay. All right, let's get to some currencies here. Euro US dollar continues to run, but we're getting a little bit of a pullback here. So a little bit of a pullback on Euro USD almost certainly means you're seeing a little bit of a dollar strength, right? Pound US dollar, GBPUSD. Same thing. Off the highs. Wow, we touched 143. Honestly, it's almost hard to believe. I mean, you look at that channel. We popped out of the top of the channel. That's an incredible move, right? That's an incredible move. And by the way, what I said for the U.S. probably might go for the U.K. as well. I'm not sure if I'm not sure if Brexit has any impact on the internal housing market in the UK. It might also apply. But look at the pound, and it's blowing off some steam here and re-entering the bull channel. Euro and pound against each other. Where's the opportunity is the question. right? Now here's one we tried to set up that did not work. So we gotta, look, you know, we gotta be fair here. We were doing our little victory dance during on dollar yen in the first segment because we hit all three targets, but here's one where, hey, we didn't hit any targets. On euro pound, this one clearly got stopped out before it hit the first target on euro pound. So much for that one, right? So much for that one. Richard says Brexit has affected wealthy EU citizens in London, particularly the French. Okay, so it could be having an impact on housing market in London, on the London housing market. Absolutely. So really not sure if that's having the same type of really probably not having the same type of impact over there at all. So anyway, is there a trade set up here? Obviously, we tried one already and got booted out of it. So we're just gonna leave that be for now. I'm just gonna lick our wounds on that one. Hey, listen, we had a win on dollar yen, we had a loss on euro pound, but one thing for sure, the win is bigger than the loss, and that's what really matters, right? Now, the one thing I did find intriguing about pound dollar was the pullback here. The pullback into the channel. At what point does this pullback become deep enough to create a buying opportunity? This is where I might begin to look at RSI. Now, this is way overbought on the daily, and it's just coming out of overbought on the daily, but I'm not really concerned about that. I'm not really concerned about long-term overbought. I'm really concerned about short-term oversold is what I'm looking for on the pullback. So I go to the 60-minute here. Oh, Carlos, we'll get to that. Don't you worry. That's coming up. I am pretty excited about that whole housing thing in the U.S., though. Here's the dip. Should we avoid cable shorts? Asks Richard, and I would say absolutely yes. This is the type of thing that we're looking for, and it just occurred a few hours ago. This pullback on cable, and I missed this, unfortunately, but this is exactly what I hope to see. All right, there it is. It was a little bit early for me on a Monday, but we got oversold. Right, we got a little oversold here, and it looks like I just missed it. Is the time right on this? I don't know if the time is correct on this, but it looks like it pulls back here a few hours ago. And you see how it becomes oversold here? It drops below 30 on the RSI. That's the buy signal that I'm looking for because the long-term trend is up. So Richard asks, should we be looking to avoid cable shorts? Absolutely. Again, pound US dollar daily, it's pulling back into the channel here. But there's no way I'm shorting this. I mean, because you look at the channel. Now, there are situations where you can go against that channel for a quick, a quick trade to go against the trend. But look how strong it is, though. I mean, when I look at that thrust, and when you think about how weak the dollar is and how likely that is to continue, especially considering that the Treasury Secretary of the U.S. has basically given his blessings to the weak dollar, there's no way I would want to short this at this point, and it's already come down a bit. So I'm thinking this is the right time to look for oversold on the hourly. Okay, there might be certain situations if the trend's not so strong where you might consider going against it, but not in this particular case. So there it is, right? There it is, the oversold. That's what you're looking for right there. It just happened a few hours ago, right here. Cable falls far enough that the RSI drops under 30 on the hourly. On the hourly. And it's important, you know, to understand. I'm not looking for this to become oversold. I don't care about the daily. I don't care about the 5-minute. You know, daily is too long term. 5 minutes too short term. You know, I'm looking for the hourly here, and to go long and to get in harmony with that trend. So how to play it, and again, it missed the boat already on this. So when it becomes oversold, it becomes oversold on the red candle here. That is not a buy signal. That means get ready to buy, right? When RSI drops below 30, that means get ready to buy. And then when it pops above 30, that's when we actually buy. So you see where it turns green here. It even turns green here. Let me get rid of that ellipse. You see how it turned green? That's because it popped above 30 when this candle closed. So I really wait for that candle to close. It'll flip above and below 30 while a candle is open. So I really want the candle to close above 30. So that would really, if I'm waiting for the candle to close, that's going to put my entry right at the close of the candle, right there. So my entry would have ended up being 1.4070. Your stop goes under the low of this area. So what is the low of that area? The lowest point of these candles looks to be the wick of that green candle. 140.55. Yeah, because the low here is 140.56. 140.55 is the low of this candle. So I'm probably going to go based on the wick. Based on the wick, Richard. So if the low of that wick is 55, I'm probably going to go 45. So 14070 is the entry. 140.45 becomes the stop. So I'll put a red line at 140.45. You can't see it right now. It's dropped off the screen just a touch, but it's there. And then as far as targets are concerned, well, if I wanted to do a straight up 3-to-1, right, my stop is 25 pips from 70, and that says 70 2/10. So just to avoid any confusion, I'm going to get rid of the 2/10. So 70 to 45 is 25. So if we wanted to do a straight up 3-to-1, it would be a 75 profit. That would be 141.45, if I'm not mistaken. And that's if you're just doing one target. Let me go target blue. Now I'm not one to just do targets based on 3-to-1, simple 3-to-1. That's not usually how I operate, but that's just a simple way. I would really like to look at resistance. Like this area of resistance up here looks interesting to me, and it's very close to a round number. What are you talking about? Siri, I have no idea what you're talking about right now. She just interrupts. I don't Okay, I'm going to take you back to the factory, Siri, if you don't knock it off. Okay, this looks like a much better target to me. I mean, I like this up here. See this 142, and you see how the price just sort of topped out up there? That looks like a really much more viable target. I won't make it exactly 142. I'll probably cut it down a bit. That's a 130 pip target. I'll probably cut it down by about 15 pips or so, which is about 10% of 130. So instead of 142, it becomes 145.85. See, I don't just base trades on 3-to-1. I think it should be at least 3-to-1. I think is good to use that, but I don't think simply basing it on math is not good enough in my opinion. There you go. That target makes a lot more sense. I think it's okay to have, whoops, that says 142.85. It should be 141.85. 1.4185. I was wondering why it jumped so far. There you go. That makes a lot more sense. So simply, right, very simply put, that's actually 4-to-1. Just from the eye test, that's about a 4-to-1. And I would probably have more than one target in here. I'd probably have an additional target. Now, I might simply use this round number 141, which is approximately 1-to-1. It's actually, let's go just under 141. Let's go with 140.95, which is exactly 1-to-1. And at 140.95, which is exactly 1-to-1, I'll close like a quarter or a third of the trade at that point. And move the stop to break even. So if I can just get to there, if I can just get to the first blue line, I win. Does that sound good? If I can just get to 140.95, I win. We'll close like a quarter or a third of the trade, nothing major, and we'll move the stop to break even, and then we're playing with house money, shooting for the moon with the rest of the trade. What do you think? Does that sound reasonable? I'm not in the trade, obviously, but you can see it's already almost there, right? So what I'm saying is, make the first target easy, right? Make the first target easy to hit. And then, then take a little profit, move the stop to break even, and you're still in the trade. And then try to knock it out of the park or hit it for 6 if cricket's your thing. Try to hit it for 6 with the rest of the trade. People put themselves in these positions where they need something, a miracle to win. And to me, that's absurd. Instead, we don't need a miracle to win with this setup. We just need something fairly easy to win. Let's make winning easy. What do you think? This thing's already hit the first target if we set it up this way. Appears to have, right? So anyway, Carlos, I'm sorry, no time to get to the. We'll get to Aussie tomorrow, okay? I promise. First thing. because I really wanted to focus on that too. But there's so much to talk about because I've been away, and so much has happened here, right here in the Ponzi household. I became. We usually have this whole system here, and you know, things went kind of haywire. But you know, we're a family, and everyone's picking up and doing extra here, and including me, which means I wasn't able to spend as much time with you folks as I would like. So, but it's all good, and everybody here is getting healthy again. So, all right. Anyway, I will see you all tomorrow. Okay. So let's meet up again tomorrow. Great sessions today, everyone. And thanks to you all. Thanks for your participation. I really do appreciate it. And I'll see you again tomorrow. Okay? Everybody take care.